everybody. I'm Peter Grant with Zaner Metals, and this is This Week in Metals. With me is Mr. Peter Thomas from Chicago. How are you today, sir?
We're all good. We got some sunshine for a change on this beautiful Memorial Day as we remember our brothers and sisters that have gone before us. We appreciate your sacrifice. The people that are still towing the line, carrying their weapons in our behalf, you are not forgotten. Thank you so much.
Wonderful. Thanks for that, Pete, and thank you for your
You bet.
service. Let's take a look back at last week first, and was a pretty decent week. I mean, we
Yeah.
saw a new almost 8-year high in gold, and then couldn't hold those gains. So we actually ended up closing a little bit lower. But I think the 1800, 1810 level in gold still looks pretty appealing. What do you think?
It looks attainable. I think technically there's a lot. Let's look at it this way. There's a lot of negative things going on in gold. So for this market to be holding these levels is really impressive. I mean, I'm looking at my notes here in gold jewelry sales in China, which is a big number, by the way. They're
Yeah,
down 65%.
right.
I mean, that's gigantic. Now let's couple that with a 41% decline in India. Because remember, in India, it's different than here in America. If you, rather than depositing a little bit of money in the bank, they'll go to the local gold store, buy a bracelet made of gold, put it on their wrist. That's a gold deposit, and it's on their wrist. And when they need to trade it in, they go in and they trade it in. So it's a different kind of market. So 41% in India is very significant, which you couple those two together, and that's 27% of the global consumption of gold. So taking into consideration, we really put in a good performance technically and
Right.
consumption wise. And now two of the major central banks, Russia being the lead, came in and said, "Oh, we no more buy gold." And then of course they came in today like gangbusters buying, and they were only 8% lower on their consumption year on year as I reviewed the numbers. So we're seeing central banks buying a little less, China and India buying a little less, and we're still seeing record flows going into ETFs. So it's very interesting. Why are we here,
Right.
Pete?
Right. Well, yeah, I mean, this is a theme that you and I have been talking about for
Right.
weeks now. The
Oh, yeah.
massive demand destruction in the jewelry sector
Yes.
is being largely offset by safe haven demand in the
Yeah.
investment sector.
That's exactly
And
what I thought too.
yeah, and so you mentioned the ETFs. I mean, we've seen as of last Friday, we've seen 20 consecutive days of inflows into the gold ETFs.
And I think
And
silver broke a record going back all the way to like 2007 and 2008 for inflow as well.
Yeah, so
Yeah.
huge investment flows. And I think people, are still understandably worried. I mean, even as we sort of make those initial tentative steps towards normalcy here in the States, I think everybody believes that this is not going to be a V shape. I don't know that everybody believes it, but I think a lot of people believe that this is not going to be a V-shaped recovery necessarily. And uh, Fed Chairman Powell was making the rounds last week.
Right.
He continued to have his sad hat on,
Yeah, he
and
did.
um, said that the recovery may extend into late 2021.
I said, yeah, I was kind of startled that he would even say that, and I concur. I mean, the sad hat is on. He's got the long face. Oh, it's all going to be so bad. I agree with you too. I don't think it's going to be a V, but I think the beta or the velocity, let's call it, will probably be a little stronger than I think a lot of people are thinking because there is a lot of pent up demand right now, and the question is how much.
Yeah, and I think that's true as well. One interesting one interesting quote I saw last week. Somebody in reaction to Powell's testimony was that he can't print jobs. And when you think about
Like that. Yeah,
36 million Americans have lost their jobs,
right,
um, it's going to take a long time to come back from that. I think that a lot of companies may also sort of reevaluate positions and say, maybe we don't need all these positions back, or let's bring them back on gradually and see how we do.
right.
And
But
so I think
but
that there's some
let's
concern
jump
about that.
let's jump into something here, and that is advanced macroeconomics at University of Chicago. This is a model that they run, and I think the validity is very strong. One white collar job creates seven extraneous jobs. So you have a dry cleaner, a house cleaner, the car gets the oil change. So the fact is that when you put one person on, you're supporting an entire community, and I believe that if we get a big push and we see a lot of jobs coming on. The ancillary jobs, as it's referred to, I think will really be a shot in the arm for the economy. And I believe a lot of us, you and I included, will be rather surprised by the velocity of the pickup.
I appreciate your optimism, Pete. It is in direct contrast to Chairman Powell's pessimism, it
Well,
seems.
I wouldn't want to go against the Fed.
And
Okay.
I think some of it may be feigned, pessimism, because he's trying to get Congress to do more, so that the Fed has to do less. I think
That's interesting.
there's
Okay.
been about $3 trillion in fiscal stimulus so far. There's
Whoop,
another
whoop. What
trillion.
is the magic number? Thank you. We're looking. What is it?
I'm thinking 12
We're
trillion
at
on the
12.
Fed
We're at 12
balance.
now?
Oh no, we're not anywhere close to that.
Okay, all right.
I
But I
didn't
mean,
I
we
didn't
had your
check.
wager there. I was gonna say we had I was sort of every
We're
week we've
probably
been
pretty close to 7 right now.
nice. Okay, so you're
Yeah,
getting there. You're getting there.
I'm
That was
getting
quite a
there.
prediction when you made it. So
Yeah.
we're a little better than halfway there. So all
So
right,
3 trillion in fiscal stimulus so far.
right,
Congress, the House, anyways, has passed an additional 3 trillion.
right.
That's going to be hung up in the Senate. We'll see
Absolutely.
about that.
And they
Uh,
haven't spent the last allotment, by the way. They still have money left and they're talking panic. So I get confused by that too.
right. So
Yeah.
and then so the Fed, continues to, at least Powell continues to kind of poo-poo the notion of negative rates here.
Yeah.
I
Right.
don't know if I mean, if this recovery is going to take more than a year, I mean, it's going to take a year and a half.
Okay.
Uh, I think you almost have to go negative on rates, but
You and I have been talking about this for the last 2.5 months. I've been talking about this on Bloomberg for 4 months. And by the way, with everything going on in Hong Kong, our good friends in Bloomberg, on the metals desk, our thoughts are going out to you. Please be safe. We know that this thing can get ugly in a hurry, and we think about you. But I mean, we look at Japan, and I think this is very critical. Japan was 21 years at negative rates and did quite well. And there was no big battle there other than people got used to the fact that their households were going to deposit 10% a week, no matter what, in order to support their country. They're very patriotic people. They put the money in. They got charged to put the money in, and they all got used to it, and it worked for a long time.
yeah, I'd be disinclined to pay money to have it on deposit in the bank. I would probably buy gold instead. That's just
Well,
me.
I don't understand why. I mean, it's just up 29% on the year. I mean, why would you be interested in owning gold? I mean, you could get a T-bill at 0.2. Come on.
Right. So yeah, and like we've already mentioned, gold has been on a bit of a tear lately,
Yeah,
and approaching 8-year highs, and beyond that kind of 1810 level of
right.
resistance, there's really nothing until the all-time high. And it's important to remember that, gold has been setting all-time highs against most other currencies already.
That, yeah, very valid point.
And
20 broke 29 highs in other fiat currencies over the last 3 weeks, and I'm really glad you brought that up.
yeah.
Yeah.
So do you think it's just a matter of time before we're at new all-time highs
Well, I think the
against the
thing
dollar?
is, who's going to sell it? If it picks up speed, remember the type of trading that we have now is different. The market picks up speed, it starts climbing, and all the algo traders get a green light, and they don't even trade it. I mean, it just automatically buys it. So if you've got automated trading going on, and a market is moving up, you've got participants that don't even know they're participating; they're just purchasing,
Right.
and that is by itself kind of scary. But to your point, which is extremely valid here, there's nobody to get in the way of it. I mean, we go through 1810, 1820. Who's going to be a seller? Because at that point, do you want to be short with no resistance overhead? That's the question. Granted, Putin did say he is going to give visas for sale export for some of his product, but he didn't say how much. And then immediately after he said that, 7 days later, he was buying more gold. So I'm confused,
Yeah. Anyways, well, that market still looks pretty good in my
Yep.
opinion. Let's
Yep.
move on to silver really quick.
Okay, sure.
Silver ended last week up a little bit more than 3%. So silver continues
Big
to
move. Big move.
show. It was the third higher weekly close. We've broken some key resistance levels. I still think 1791 to 1800 looks or $18 looks pretty appealing in the silver market. What do you
I
see in there?
I'm thinking anything over 1820, we're going to $19. It's going to run into a lot of resistance around 1879. But if we hit 19, we could run. It's going to get down to consumption and solar cell usage, which is just getting larger by the year. So if we see that, then we definitely are going to see some pretty good sized consumption. And I think as you are the bastion of holding our numbers, housing construction really wasn't all that great. So some of the raw metals that we're seeing consumed are still a little bit behind. They're lagging behind, which includes copper, because we need to remember it's an industrial metal also. So durable goods, Pete, where was that number at?
Well, durables is out this week,
Yeah,
later in the
we've
week,
got
and
an estimate.
yeah, expectations are running minus 17%,
That's a,
17.2%
that's a big
on
number.
durables. So,
Yeah.
that sector continues to get hit pretty hard.
So we could see pressure on silver going into next week, and if not, maybe just topping for a little while, because it'll do that for quite a while. It'll hang in a trade pattern for a while. But if we see that durable goods number, such as computers and all the electronics and stuff, pick up, that could get very interesting in a hurry.
Right. Well, that strikes me as kind of a natural transition onto copper then.
Yeah,
So
yeah,
copper had a decent week last week,
very nice week.
closed
Yeah,
up again almost 3%,
yep.
2.7%. Faded though, sort of into the end of the week.
Well,
But
we always fade into Memorial Day. I have no idea. It's just lack of consumption. I got the 2019 numbers were posted. 1.8 million metric tons were consumed. Estimate for this year, we're looking at 23.8 million metric tons. I believe that was a Reuters number. And I think that that is a very large consumption number. Our friends from metals were all telling us that the trucks are rolling, that they are moving product and they're moving it in a big way. So demand has been good on the recycling, fresh refining areas.
gotcha. Yeah, I'd like to see copper get above the 100-day moving average on a closed basis. Um,
Okay.
I think that would really at least clarify the picture, technically speaking, and
Makes a great deal of
Yeah,
sense. I
we'll
mean,
just have to wait and
at
see.
that point, it would show it has the muscle to get to an area and then hold it. That's gonna the thing with copper is it will take out numbers and then set back. You remember when you and I were looking and talking at 235 to 237, and it stayed there forever. And then when it broke through 37, it ran hard up through 40. I said, now, okay, guys, we got to hold 240 and hold it for a little while, and then we'll see probably 245, 250, but it couldn't hold it. So just from a technical standpoint, Pete, I think we're seeing a little skittishness here.
Yeah. Platinum also had a really good week last week, closed up 5.6%.
That was monstrous. Yeah,
Traded above, kind of exceeded our 850 objective that we have talked about
right.
previously. And then again, kind of sold off into the weekend. But that market looks pretty good, and I think it's garnering some additional support from the safe haven buyers who are maybe looking at gold, going a little rich for my blood,
Yeah, yeah.
but
There's a lot of
platinum looks
validity to that.
attractive.
I was just going to say platinum, that is such a valid point because if I could buy some platinum in the eights and I'm looking at 17s in the gold, it all of a sudden it changes its shine. It's not
Here's
such
the
a bad
thing,
thing to
though,
own.
little tough to get physical
But
platinum these
yeah,
days. We're
our
uh,
guys are telling us they're moving AutoCADs as fast as they can load them. We're seeing product move. A couple of our refiners are actually stepping up and buying the ultra high heat kilns that are needed to refine platinum, but it's a little late and it's definitely not going to influence this market for a while. So I concur with you. Like, go ahead and try to find one, and platinum, palladium, both. Try to find a palladium coin. Best of luck with that. I mean, we'll buy all you got, anyone. If you're listening,
right.
give me a call.
Yeah, that's true. Certainly, I think we have platinum 2020 platinum eagles available, but anything small bars and stuff, you just can't find them.
Yeah, they're not there.
Um,
They're not there. They're
so
going in the furnace. They also, here's something very interesting that I'm afraid we didn't mention last week. It's very important. Our friend at Tesla said, you know what, California, see ya. I'm tired of your taxes and all your abuse, and I'm moving to Texas, and I'm taking my truck manufacturing with me.
you did mention that last week.
Oh, okay,
Yes,
great. Oh, big deal.
yeah, it
Very
is a
big
big deal.
deal. Yeah.
Win for Texas.
Win for Texas and definitely a win for the consumer because he can sell his trucks cheaper.
Right.
Yeah,
Uh, Palladium had a decent week. Closed up almost 4%.
yeah, it was nice.
But again, a fade sort of into the weekend.
We just saw a 4-day trading week with some weakness coming into the close. People taking profits, painting the tape, if you will, and so we saw some setback. But next week, guys, watch your gold. It's for all the reasons that we covered. It's going to be very interesting.
Right. I like it.
Okay.
Um, I think that we've got all of our bases covered
Okay.
this week, Pete. And
Anything that we should be looking at for next week? Any numbers that
yeah,
really
so
catch
that
you?
durable orders number, I think that's on
Okay,
Tuesday, is going to
Tuesday.
be a big
Okay,
deal.
that is a big deal.
And again, the expectation is minus 17.2%
Thank
for
you.
April durables.
Gotcha.
Um, we get our second look at Q1 GDP.
Ah,
Minus 4.8% is the expectation.
about what we're looking for. Yeah, no
Yeah.
shocker there. Okay,
And then on Thursday, PCE, so personal
okay.
consumption
Personal
expenditure,
consumption. Okay,
down 12%, or is
okay.
the
That's a
expectation
big
for
number.
April PCE.
That's a
So
big number.
again, I think that as these data continue to come out and look
Right.
pretty bleak,
Yeah.
it's going to continue to feed that safe haven demand that
Yeah.
there might be some
You have
reason to
interest
be
rates at
concerned.
almost zero and nothing but gloomy news. And if you don't own gold, you haven't missed. I'll tell you what, we had some customers come in last week, some really, really wonderful people. And they said, we've been trying to buy gold for so long, and our financial advisor has been recommending against it. And they're already up $1.50 in the silver. So It's probably not too late, guys. If this thing decides to run, there's a chance you're going to do pretty well.
Dollar cost average.
Yes,
Buy
sir.
regularly,
DCA, baby. Buy
regardless
often,
of the price.
buy often, and buy regularly. Yeah.
Yeah. All right, my
Okay.
friend. We'll have a
Oh,
great trading week. Thank you,
you
everybody, for
too.
joining us again. Give us a like and please subscribe to
Absolutely.
our channel, and you'll get this information pumped right out to you.
And also, our Twitter is during the week as we see things develop. We try to get that out to you. We try to keep you in the loop. So all you guys on CCE that aren't following us on Twitter, switch over to that because we'd like to keep you as informed as we can.
Absolutely. Thank you once again. I'm Peter Grant from Zaner Metals in Denver.
Pete Thomas in Chicago, and have a good one. We'll see you next week.